Hey everybody in Milkshakes Markets Madness Land. This is Brent Johnson. My name is Jon Kutsmita. We're here for the Monday Peek at the Week. We do a number of videos throughout the week. If you visit us on our YouTube channel at Milkshakes Pod, you'll see we have a number of playlists that break everything down. We have a Start Here playlist that takes you down the rabbit hole. We have the Monday Peek of the Week. We have our full-length weekend episodes. We now do a madness segment for all those people who just like fun conversation and not so much of the deep dive into markets. We've got it all there for you. And today we're going to talk about the week ahead, look at some of the things on the economic calendar, and get Brent's thoughts on some of those headlines coming up. You know, Brent, last week was quite a doozy. You had a ton of stuff going on with the BRICS. They had their summit, the Jackson Hole Symposium. Markets were kind of all over the place. NVIDIA had this green lightsaber post-closing performance. And you think after something like that, you know, the market would get a chance to catch its breath, but it doesn't feel like they're going to be able to do that this week with some of the things that are on the calendar.
Yeah, there's a lot this week, and I don't know that any single one of them, other than perhaps non-farm payrolls, I don't think any single one of them is necessarily that big a deal. But when you're coming off of a week where the Fed chair just again reiterated that they're not done, that they still see the need for, tight monetary conditions, and that could not just mean more rate hikes, but leaving them there for longer than people expect. This number of these indicators start to become more important, especially if they all kind of lean towards the same way. In other words, if all of these were to come out and kind of beat expectations, that would signal that Powell is right. Things need to stay tighter for longer. And I think markets would take that as a negative as far as asset prices are concerned. The flip side is that if, a number of these come in, on the dovish side or miss expectations, that would indicate that the Fed's policies are having their intended effect. The economy is slowing, and as such, inflation pressure should be coming down. And so therefore markets might view that as well. That means that rates aren't going much higher. They're probably going to stop going higher, and the cuts won't be too far below, so far after that. My guess is that we're going to get a little of both, and we're going to get some more of this, violently sideways stuff. I expect it to be a volatile week. I don't spend a lot of time trying to calculate these things on myself and what I expect them to be. What I do is, again, I just try to understand the big picture and what could happen and why it could happen. And then I look at what the expectations are as far as the guidance is. And then when I see it come in, I see whether it's higher or lower, and, kind of see if I need to do anything from there. But this is going to be the last week of the summer, kind of speaking. A lot of times market participants, are out on vacation. They're not right in front of their desk. And so you will sometimes have like junior people manning the desks and not as much liquidity as you typically would. And so that's when things can get pretty interesting. If you do get some market moving news on a day where not everybody's at their desk and there's not as much liquidity as there typically would be, that's when you can get some fireworks. So I don't think it's a week that you can just go to the beach and not look at your screen. And so I won't be doing that. But that's kind of where we're at.
Brent, you don't go to the beach anyways. Be honest, except to walk your dog.
It's funny. I was in it last week, and I was out there just kind of hanging out because I actually love the ocean. I'm just terrified of it. And I was sitting there thinking, John would not believe that I'm actually doing this right now.
I'm glad I'm in your head. Yeah. So I appreciate you. You do this every so often. You kind of reiterate the fact that you're more big picture player in this game. And I think that's important because I feel like a lot of people think in order to achieve success, and people like you who articulate so well your view on markets and how you're approaching that and assumably doing well in that exercise, that everyone in that role is looking at every grain of sand. And so it's important for people to understand that it's don't get caught up in every little ripple, and you got to watch out for what's happening in the broader weather system here. So I think it's good that you kind of bring that up on the regular. Now on Tuesday we have the JOLTS job openings report. That these kind of all kind of go coincide with the employment figures. It just gives people oftentimes something to get riled up about before what they actually care about, which is the NFP. We do have a Shiller home price index report on Tuesday as well. Housing is becoming more and more the focal point. I don't think I could have seen any more charts saying the same thing about interest rates being at this 20-year high and home sales being at a 20-year low and applications being at all of these figures. People are just so in love with this, and there's a real supply issue in the housing market, and how that resolves itself no one really knows. But the fact that it's become such a talking point, everyone's going to find something to extract from this Shiller home price index. So there should be some excitement there on Tuesday from that. Wednesday, we have ADP employment. Again, another one of these like precursors to NFP. There's been a lot of divergence between ADP and the NFP non-farm payroll report. That's almost a silly thing to even care about. We do have an advanced retail inventories number. Now, on the weekend long, the full length episode, we talked about some of these stocks that are underperforming. Most of them are retailers like Nike and Foot Locker. So maybe there'll be some gasoline poured on that fire and kick some of those guys down in the ground a little bit further. Thursday, we have PCE, the personal consumption expenditures. Now, Brent, what are your thoughts on, PCE falls similar into that CPI category. The Fed apparently likes to lean more towards PCE. What are your thoughts on inflation right now overall? Are you seeing a trend, and how much do you think this is going to impact the potential September rate hike decision?
Well, I don't, unless it comes out and it's dramatically different than expected, then I'm still planning on them hiking rates in September. Again, I even think if markets sold off 5 or 10% in September, I don't think that they would necessarily skip hiking rates in September. I don't think that Powell, maybe some people on the Fed would disagree, but I don't think Powell would be upset if asset prices, specifically stock prices, were 5 or 10% lower from here. Stock prices are pretty close to where they were when he started his hiking cycle. Again, if you could have told him 18 months ago, we're going to let you take rates from 0 to 6%, and asset prices will be within 5 or 10% of when you started, I think he would say, done. I'm a buyer of that, right? So, and again, you have to remember what he's trying to do. He is purposefully trying to do things. He's purposefully trying to slow the economy so that inflationary pressures come down. And one of the way that you slow the economy is because it's debt-based, if you contract the collateral off of which loans are made and used to justify the extension of credit, then that contracts the level of money that can be in the market, or it has the potential to contract the level of money that can be in the market. And then as that money supply contracts, prices should come down. Now, whether you believe what I just said or not, it doesn't matter. I'm telling you, this is what Powell believes. And so that's the formula that he is using to determine whether to continue hiking or not. And so I think he kind of wants to see asset prices a little bit lower, because in his mind, that would mean that he's getting closer to his 2% inflation objective. Now, he doesn't want markets to collapse. He doesn't want, a COVID type scenario. He doesn't want a scenario like 2019 and the repo crisis where they have to just totally pivot right away and go from hiking rates to cutting rates 2 weeks later. But he doesn't mind if asset prices are lower. And I think the people that believe he doesn't want asset prices lower are kidding themselves. Now, it doesn't mean that he's, I think initially he thought that he would have to cause a recession in order to get inflation back down. But, as we've discussed several times over the last few weeks and maybe even a few months, now that he's getting closer to his objective, I think perhaps he thinks that he can pull this off without causing a recession. He can get the proverbial soft landing or the Goldilocks scenario. So I don't expect him to be as forceful as he was at the beginning. But I've seen nothing that tells me he's ready to pivot anytime soon. Now, if he does, then we'll have to deal with that at the time. But again, and that's just kind of where we're at. We're sometimes you play the hand and sometimes you play the man. I think like right now, I think the data would tell you that it's time for him to start slowing down, and he doesn't need to be as forceful. But, I'm not necessarily playing the data. I'm kind of playing the man right now. And the man tells me he's holding his cards and he's going to keep playing. And so that's kind of where we're at.
Yeah, your comment there isn't even necessarily an interpretation. It's like if you were playing Powell in a poker game, he would have a Post-it note on his head saying exactly what he intends to do. Even the comments from his speech at Jackson Hole highlighted in multiple sentences lower asset prices, lower home prices, lower asset prices. So he's telling you what his goal is. And the data, of course, matters. And it certainly has mattered a lot more getting to this point. But at this stage of the game, if we're seeing some fluctuation in inflation or manufacturing or whatever it may be, but asset prices aren't budging because whether it's a supply demand issue or whatever the case may be, there's still, decent velocity of capital. Then I could see him continuing to remind everybody asset prices need to be lower. So we'll see what happens with the data.
On that too, I should say, I think a lot of times when I say asset prices, people think I automatically assume equities. And I do. A lot of times I do mean equities or real estate, but I also mean bonds. And this is the big conundrum that everybody's trying to figure out. A lot of people will say, well, what happened to these risk-free treasuries that, those are down 30% over the last year and a half? Well, risk-free as it relates to treasuries never was meant to insinuate any time between the time the bond was bought and the time to maturity. There's always interest rate risk in bonds. The risk-free connotation comes from the fact that you will get paid back in dollars at maturity. But the biggest piece of collateral in the entire monetary system is U.S. Treasuries. And if you can constrict the price of U.S. Treasuries, then you can constrict the amount of money or credit that is extended off of those. So Powell does not mind that bond prices are down. I think whatever you think of central bankers, no matter if you think they're morons or evil, they know that if you hike rates, bond prices fall. So this is the idea that Powell has had the steepening, the fastest and quickest steepening or hiking cycle in history, and that he's somehow surprised that bond prices have fallen. You're out of your head. I mean, you're literally like on Mars. Of course he knew that bond prices were going to fall. He wanted bond prices to fall. And so, that's where we're at. So I don't think that he cares that the 10-year is at 4.5%. I don't think he cares that it goes to 5%, because I think he thinks that will help him achieve his objective. Now, again, you might think this is stupid, and that's fine, but understand what he's thinking, because he's the one making the decision, not you, right? So again, you kind of got to get in the other guy's head and look at his hand and look at the cards he's playing, rather than just focusing on your cards all the time.
I feel like it should be saved for the Madness edition, but you said Mars. I have to ask, did you see the video? I can't even tell if it was real or if it was just parody. It was a video, I think, of India landing something on Mars or the moon. And then China did it, and both of them were just like the worst CGI bogus video ever. Did you catch any of that?
I saw the headlines, but I didn't see the video. I know Russia tried to land one a week or so ago, and they had a hilarious way that they described that it stopped working. And then I know, this recent one of India, and I saw the headline, but I didn't see the video. I'll have to look it up.
Yeah, we'll save that for our Friday Madness. It was pretty comical. So hopefully Friday coming full circle now, non-farm payrolls. Let's hope there's nothing comical about that. Another one of those expectation things, the number could come in strong but below expectations, and you'll see a bit of volatility into the market. So again, Brent's take here is these things matter, but really it's market reaction, and overall there's going to be a bit of volatility to keep your eye out for, but most importantly, keep your eye on the prize and the bigger picture at hand. Brent, thanks for sharing your perspective on some of the stuff that's headed this week. If anyone wants to deep dive in some of the videos I mentioned, some of the other episodes the last couple of days, you can find that on all your podcast feeds. It's on Spotify, and most importantly, it's on YouTube at Milkshakes Pod. You can find Brent most frequently communicating with the world on Twitter at Santiago AU Fund. You can find me there as well at Jon Kutsmita. And that'll do it for the Monday Peek at the Week. And good luck to everybody out there, and we'll see you guys in a couple days.
I'll keep holding on.
This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.